Hey, welcome back. It's Simon J from Compare Recruitment Factoring. We've got another episode of Recruitment Funding 10, and today we've got Tom Ludden from Bibby Leicester. Tom works quite heavily in the recruitment market. I'm looking forward to speaking with him. So I'll let him introduce himself and enjoy. So we've got Tom Ludden. Tom's from Leicester, and he's been bugging me daily to do this because he's bored of lockdown. He wants to do 4 a day, and I said we'll do 1 and we'll cap it at 15 minutes. But yes, Tom Ludden, Bibby. Tom, will you introduce yourself? Tell us a bit about you, your background, a little bit about Bibby, and we'll jump into a couple of questions.
Yeah, no, sounds good, mate. So Tom from Bibby. I look after East Midlands and East Anglia for Bibby. Been with Bibby, or started with Bibby, so 2004.
Wow.
Yeah, mate, yeah, 16 years.
Wow.
Yeah. Mate,
you all seem very similar ages in it now. Some of the other ones we've been doing, they're all 10 to 20, and most of them between about 12 and 16, 17. Saw Graham the other day, who's very, very similar to you.
Mate, it's really strange, and we all seem to have done a similar sort of proportion of time as well. So it's all sort of between 2 to 6 years of ops background.
That's one of our questions.
Yeah. yeah. So yeah, it's really strange that there's always the same mix, but hopefully that's a good thing.
And you've been with Bibby the majority of the time.
Yeah, I had 1 year to the day 1 year that I worked for a smaller independent lender that just looked after back office, and then back to Bibby. So yeah, all but 12 months at Bibby.
Wow. And yeah, a little bit about Bibby, I guess. And lots of people will know the name Bibby. I always used to, before I'm in this market, it was the lorries on the road and the
nice to have the flag and the dagger out there as the welcoming emblem. The largest independent factory in the UK.
Okay.
We celebrated our bicentenary as Bibby Line Group in 2007. So a long-standing family-run lender. So yeah, good to work for them. A lot of knowledge within that.
Still owned independently, still owned by 1, 2.
Yeah, it's still. I think Sir Michael is back on the board, or coming back on the board this month. So,
brilliant.
Yeah. He's a very nice chap. Met him quite a few times. Yeah, he's a good Liverpool fan as well. So I've been celebrating last night.
Yeah, I bet. Yeah. And you were 16 years, and we'll jump into the other question because that's one of the actual key ones. And my first one to you, and you actually kind of picked up from some of the other videos. But I'm really interested why so many BDMs in IF have an ops background, and where it really adds value to their sales role. I guess especially selling directly to recruitment businesses. You deal quite heavily in the recruitment market for Bibby, Tom, which is hence why we've got a good relationship. Why that background before adds the value, what value it adds, and maybe a little bit into why it helps in recruitment too.
Yeah. No, you're right. I do think it's a big advantage having the operations background. I think understanding what the client needs is a big part of the job.
Mm-hmm.
Now, a lot will come in and really get under the skin of what a client needs and what products are available. I think the ops background, like you say, for the other gents that you spoke to as well, it really helps knowing what you can deliver. So if a client brings you what do you do in this circumstance, you've got an answer for that.
Yeah.
What are the options? How can we get around this? What is the best product on the market for us? You can give a good understanding of what Bibby can do from experience. So I think that does help. I think it's more than anything, it's understanding the value of a client.
Yeah.
Because if you've been on the operations side and you've understood what it takes to make sure that client stays happy and that we can support in full, you understand how important it is on every prospect that you're dealing with. So every client being vital, it gives you that feel. So.
And you understand the complications of when it's actually going to run. So I've never worked in ops, and I guess probably in my early days of sale, it was let's get the sale, let's do it, and sort of you don't understand what happens after, and then you become sort of not the greatest salesperson in the team because you've got a bad name because the quality or the way you're handing something over is very different. Whereas I guess you're selling something and you know whether it's going to work. I guess with Bibby, for argument's sake, or what the pain points are going to be.
Yeah, you're right. I think I suppose there's two sides to that. If I decided that I was going to ignore all my experience and proposed something that wasn't going to work, the underwriters would know I know better, which is a question I constantly ask.
Oh, okay. Yeah.
You'll know this won't work in practice, and I'll go, yeah, you're right. Let's try and do this. Let's try and do that.
So it catches you out.
It does. You are held to a higher standard.
Yeah.
I would say. But yeah, you're right. You will have some solutions, particularly on the recruitment side as well. So it'll be a case of, depending on rebate clauses, it will be funding perms at a certain time when you know it's actually going to work, rather than on day one, which causes a problem for the team. So, I mean, I manage credit controllers. I'm not looking to put anything on Bibby's books that's going to be a problem for credit controllers, because if it is, it's not going to be the greatest service to the client. So you're constantly balancing that out, which, like you say, the ops background does give you that.
The one negative I have found from working with some people, no names, or seeing people who've got an ops background moving into sales, as that you've got your dictionary is full of a lot more jargon. So you use a lot more jargon, or not you specifically, but the people who've worked in they use jargon that sometimes I don't even understand what these words are. And it's probably good or bad, but from a client's point of view, there must be words that go over people's heads. And how do you get around that, or do you have that issue?
No, you're right. It's something that you've always got to be mindful of, particularly if they've not had a facility anywhere prior.
Yeah, new start.
You're right. You can, I think, the advice would always be to use the language that you know they're going to understand.
Yeah.
So the key thing in that regard is to, dumb it down, not the right word, but you explain how the facility is going to work in practice.
Yeah.
You're right. I've had conversations with colleagues where they'll go into great detail to show how much they've understood the business. But they won't understand that the client's really concerned about how much money is going to be generated and when they're going to receive that money, which is fundamental.
Tom, number two, probably a deep one, probably one we could do about 50 minutes on, but quite briefly. Prospect's biggest concern into entering into a new facility, so factoring, pay and bill funding, etc., new start or existing. What are their concerns, I guess, over the last 4 months, and why they may not make the jump? They're taking a little bit more time to consider. What are those reasons? They're probably quite self-explanatory, but it'd be interesting to know your thoughts.
Yeah, you're right. I think they're well-founded concerns, and I've always been a big advocate of invoice finance. I remember all the training that I had back in 2004 of what a wonderful solution invoice finance is. Yeah, mate, it was a long time. It was. There were still PCs that we were working on, but it was a long time ago. But I suppose the company sold me on why invoice finance was great and why it was a wonderful tool and how it can really help businesses. If people aren't raising invoices, it's not a great tool.
Yeah.
And now that the economy is restarting and that people have got orders coming in, you can sell it easier, because you can say this is where your company is now and this is where you want your company to be.
Yeah.
And it is a long-term working capital solution. So you're right, it's well-founded. In the last 4 months, it's been very difficult to allay people's fears of, well, short-term, this is what I've got to do.
Because they don't know where that next invoice is coming from. So that's the panic. So it's all well and good having a facility, but if you've got no invoice to release cash against, there's a concern then, and there's There is. And I suppose the industry historically, so when I was managing a portfolio of clients, the majority of contracts were 18 months with 6 months notice. Yeah.
So you'd say, well, over the next 2 years, what would you like the facility to look like?
18 months with 6 months notice. Come
on. Yeah. The majority
that doesn't happen now, everyone, please. That doesn't happen now.
Imagine now, like you say, you'd have to be Mystic Meg to know where you're going to be for the next 2 years.
Yeah.
But I think as an industry, we've got better at saying, what's the next year look like? What's the next 6 months, 9 months look like? We've had to learn as an industry that month to month at the moment is where clients are and where prospective clients are. So we've tried to adapt and we've tried to be as flexible as we can. I think that flexibility will have to continue.
Yeah.
And I think the key thing for prospects to be aware is if they say projected turnover, and I'll pick a figure at random, if they say the next year I think I'm going to do 1 million, I think choosing a lender that if that turnover isn't 1 million, it's going to be 800K, that it's the lender that will adapt. So if they drop down 20%, 30%, 40%, the lender will say, right, what do you need now?
Yeah, okay.
Flexibility is the key. And that's the same for all lenders. We've all got to be in a situation where what we actually want to do is convince the client that we're in it for the long haul and that forecasted turnover isn't the end of the story.
And
that we're all
forecasts
in.
are so hard. I know when I did mine for my business, they're so hard pre-COVID. They must be triple as hard out of COVID. People setting up a business now, or people restarting their business. How you forecast for the next 12 months? God, I haven't even thought about mine yet. But how you do that? It could literally go like that. It could go. We could have a second wave. Hopefully not. And it could. There's so many things that could happen that we just have no control over at all.
Yeah, you're right, and I think that flexibility from our industry is key, because my task, and I say this to prospects, is to make sure it's the right facility now.
Yeah.
And that we as a company will support you with the changes that you do and the changes the business goes through. As an example, I put a client on about 12 months ago, and he attended 7 contracts and won 3. And on the day it went live, he said, "Oh, just to let you know, I've won another 2. So funding limit will be a little bit low now, and could do the facility review." So put him in touch with the relationship manager. That's fine. Changes were made, contract extended. We're all happy with where we needed to be. He then rang me and the relationship manager again and said, "Just let you know, I've won the other 2." And you think, well, that was uncertain then. Where that would leave a prospective client now, I don't know. So yeah, it's very difficult. I think the key thing is to make sure they know it's not a set in stone figure, and that we're going to say, well, actually, you lied to us. You said 1 million, it's going to be 1.2.
I think all lenders are flexible. I think they're going to have to be more flexible, and I think that's sort of the talk of the market. And clients will not only be looking at costs, which they don't just look, and they won't just be looking at service, but they won't just be buying from people. They will be looking at flexibility even more now, and it'd be interesting to see what the IF market does in the next 12 months, to see if there's any new norms with regards to flexibility. Tom, that's a really good point. Yeah, it's a good, and I think that probably answers that question. Flexibility is the word. What is concerning people? Flexibility. I totally agree. We've got, I guess the last one is from you to me, as yes. We do this normal format. Yeah, I'll leave it with you, and we'll see what. See what you've got. Yeah.
So my question to you, obviously it's very difficult as a lender in normal time, in peacetime, to understand whether a lender is going to deliver the products that they say they're going to, and whether they're going to remain commercial. Lockdown has obviously spiraled that completely as well. So how hard has it been to stay aware of what lenders will actually deliver and how commercial that they will be?
Yeah, it's very funny. I'm being in the middle. The providers want me to be on the side. So I guess when it all started, it was that we're still open for business. Everything is normal. And that was, I guess, the normal voice from every sort of funder. And as things sort of got a bit more serious and more serious, you could kind of assess what was happening without them even telling you. So there's certain things that it's less actual appetite from lenders. It's more clients making a decision that's right for their business. So people would right at the start, people were chasing credit limits, bad debt protected limits. It seemed to be a bit of a chase across. That very much settled down quite quickly because everyone just started pulling limits and things were going. So there was actually no benefit from someone moving from one person to the other for a limit right at the start of lockdown, because all the insurers were up in the air. Now that started to settle down. We're starting to see that happen a little bit more again. And I guess the appetite from the lenders, I don't think much changed. No one really said, hey, we don't want to do any business, which is interesting because I thought they would. I think internal credit teams probably were maybe assessing things a little bit more in detail. I haven't, in all honesty, I haven't noticed too many funders say, look, we don't want to do it because of COVID. The only things that have been a little bit sector related. So some of the funders were, and I guess again, a little bit more nervous about hospitality businesses and construction at the start, but that seems to have sort of dwindled away now. Even hospitality, we supported a hospitality business last month. It is happening. So I think we're getting back to normal, to answer that question, and have the appetites changed very, very slightly, but not massively.
No. Good. Well, that's good from an industry point of view, because the last thing any of us want is volatility from, like I said, from underwriting and from lenders saying, yes, I'll do this, and then making a change thereafter. So as an industry, we need that level of consistency. So
absolutely, and
that's a good thing for IF.
Government support, sort of trade insurance, bad debt protection, etc., should sort of get better to a degree. I think the invoice finance market is in a reasonable place at the moment. I think that recruitment businesses are settling back down now, which is great, because recruitment businesses are a massive part of invoice finance books. So
I think it's going to be a huge, probably 12 to 18 months, and a huge opportunity for specialist recruitment firms and recruitment firms in general. You're right, because of the fact that there'll be a level of uncertainty. So taking on a permanent member staff might not be the way to go. So a more flexible temp-based workforce, akin to that from 2008 to 2010, I think that's the key for the economy. So
that's what a lot of people are saying. Temp. I think that perm temp contract will be massive. I think perm will start to kick back in pretty soon as well. And let's see where we go. But look, Tom, really appreciate you jumping on with us.
Thank you, mate.
I know we'll do our second one in about 3 hours, and then we'll do the fourth tomorrow. And
I'm handcuffed to the desk, so that's fine.
You're not moving anywhere. No, well, look, appreciate it, Tom. We'll catch up soon. And thanks for jumping on.
Thank you, mate.
Cheers.